It's all about the future of money.
So if you talk to your parents, every news anchor that they remember from their childhood, there's like a 90% chance that was a actual CIA operative. And this is documented, released documents. Guys like Walter Cronkite, like one of the most famous news anchors of all time, working for the CIA to engineer reality. And they're in the business of engineering reality. And you just have to understand that so much of our reality is engineered. It doesn't mean you walk around like a schizophrenic thinking that everything's out to get you, everybody's targeting you. It just means like you see something happen on the news, you see something happen in your life, and you just have one word. Just memorize this one word when you anybody listening, when you hear that stuff or see that stuff. Maybe. Maybe. They say, oh, this happened today because of this one thing. Maybe. Just maybe. You don't have to say there's some global cabal and like I need to drill down to the end and go break into the Bohemian Grove and like figure out all the shit that's going on. You don't need to do all that. Just maybe. That word can protect you from so much of the that's going on with engineered reality.
I used to remember when I was little, my dad would religiously watch The National with Knowlton Nash, followed by The Journal. It was just like on our government subsidized propaganda machine called Canadian Boomer Corporation. It came on at 10 o'clock and my dad would religiously watch it. And it was almost like he was watching his good old buddy, you know, soothing him into what he needed to tell my dad. And it's weird because when you think about the older generation, if they've been listening to these mockingbirds for 50 years, nothing is going to convince them that it's bullshit. Nothing. It's 50 years of their life, 50 years of ingrained comfort, right? The same anchor person saying the same thing for them 50 years. It might as well be a relative at a certain point. Now, the good news and bad news, is that the new generations coming up, they're not really indoctrinated into this mockingbird asset propaganda. However, I believe YouTube and influencers are just as guilty in the CIA asset aspect of media and propaganda as the old school anchor people, right? That's why you always, I'm scratching my head on these big YouTubers in the culture and the politic. Like, how do these people have millions of subscribers? And it's always been my theory that, it's much easier YouTube than the old system, because the old system did rely on people actually tuning in, right? They had to click on the TV and they had to input the feed. But with YouTube, they can turn people on and off. They can put gas on the algorithm. All of a sudden, this person's content is everywhere, right? And then there's so many. What's going on with my fade here? Let me fix this. There we go. You got to ask yourself, why the hell is this person such a massive platform? He's such an unremarkable, or she is such an unremarkable retard. And I think it gets even more complicated if you throw in Fibonacci's. All right, here you go with your Fibonacci's again. Because there has to be a certain amount of belief in order for it to catch on, right? When you have all these opposing forces, like there's this left and right scenario, even in YouTube, you'll have these YouTube channels that are right leaning and these YouTube channels that are left leaning, and they both get my fade still fucked up here. There we go. Oh, it's a delicate line. I wonder what's going on here. Oh, it's my something. Anyway, I'll get over it. And they get turned on just enough. Like they can't have it way too much or else it becomes unbelievable, right? So they just have to pump certain people to the 23.6% fib and then let life take care of it, right? So if they pump more, then it becomes unbelievable. Where's the fade? Magic. Yep. And if they don't pump enough, well, it doesn't catch on. So it's usually that 23.6% fib, and then they can turn you off too. So let's say organically a channel grows that they don't want the narrative. Let's go back to COVID or something like that. And I'm also doing this thing here, and you get too much traction. Well, they can turn you off just as fast as they turned you on. And they turn you off for the 23.6% fib, because at that point, life will just take its course. Now, I've been saying a bunch of... This video I saw yesterday. We're going to watch it. It's a little long, but there's nothing going on in the market anyway. Like it's just been absolutely as boring as it can possibly be. We will take a look at some charts, but there's really nothing, right? But this video sums up what I've been saying about trading robot quant bots. Remember in my videos, the robot quant bots, and I always say it'll be bullish enough for the bots to kick in. You know why I don't trade? Because I know I can't beat the quant bots. Why I say don't trade? You don't know who you're competing against. The A book, the B book, they know your stop losses. They know your take profits. They know all this. So you're jumping into a shark-infested water thinking you have a chance. And that's why my whole mission on this channel was to stop trading. You're up against insurmountable odds and robot quant bots. And this is a perfect example of it. And I'll try to keep my mouth shut during, it's hard. It's hard for me to keep my mouth shut, but you'll see exactly what I'm saying.
What's the headline here?
Stock market's rigged. The United States stock market, the most iconic market in global capitalism, is rigged.
By whom?
By a combination of the stock exchanges, the big Wall Street banks, and high-frequency traders.
Who are the victims?
Everybody who has an investment in the stock market.
Michael Lewis isn't talking about the stock market that you see on television every day. That ceased to be the center of U.S. financial activity years ago and exists today mostly as a photo op. This is the stock market that Lewis is talking about.
This is what people are trading against. These, like a stadium filled of quant bots.
The one where most of the trades take place now. Inside hundreds of thousands of these black boxes located at more than 60 public and private exchanges, where billions of dollars in stock change hands every day with little or no public documentation. Trades are being made by thousands of robot computers programmed to buy and sell every stock on the market at speeds 100 times faster than you can blink an eye. A system so complex, it's all but invisible.
If it wasn't complicated, it wouldn't be allowed to happen. The complexity disguises what is happening. If it's so complicated you can't understand it, then you can't question.
And this is all being done by computers?
All being done by computers. It's too fast to be done by humans. Humans have been completely removed from the marketplace.
Fast is the operative word.
Except for would-be new traders who don't know anything of this and will go into denial for years, losing all their money. They are the only ones, the real victims.
Machines with secret programs are now trading stocks in tiny fractions of a second, way too fast to be seen or recorded on a stock ticker or computer screen, faster than the market itself. High-frequency traders, big Wall Street firms, and stock exchanges
High-frequency traders is what I refer to as robot quant bots.
have spent billions to gain an advantage of a millisecond for themselves and their customers, just to get a peek at stock market prices and orders, a flash before everyone else, along with the opportunity to act on it.
The insiders are able to move faster than you. They're able to see your order and play it against other orders in ways you don't understand. They're able to front-run your order.
What do you mean front-run?
It means they're able to identify your desire to buy shares in Microsoft and buy them in front of you and sell them back to you at a higher price.
This is why it gets scary. So what they're really referring to on it's as if they know the tsunami of money is coming, right? They know how much is on its way and where it's going to go. So before that hits the floor, so to speak, they're front running it and putting their trades in before, but not before they turn some of it into exit liquidity. So they know what's coming in. That's why I always say the market's probably going to do the opposite of what everyone thinks, because it knows what everyone's thinking. It sees these orders, and then there's spoofing, and then there's all that type of stuff that comes in. But this is why it is such a rigged game, and you just got to get in and hold.
It all happens in infinitesimally small periods of time. Their speed advantage that the faster traders have is milliseconds, sometimes fractions of milliseconds. But it's enough for them to identify what you're going to do and do it before you do it at your expense.
So it drives the price up.
So it drives the price up, and in turn you pay a higher
Or
price.
down.
Michael Lewis is not the first person to allege the stock market is rigged or that high-frequency traders are front-running the market.
Thanks for the super chat, Chadwick.
But he was the first to find Brad Katsuyama, who was the first to figure out how it was being done.
A very unlikely character, a trader at the Royal Bank of Canada, a young Canadian man named Brad Katsuyama, realized that the market that he thought he knew had changed. The market seemed to be willing to sell stock, but the minute he went to buy it, someone else bought it. The stock went up. It was as if someone knew what he was doing before he did it.
Back in 2008, Katsuyama was 30 years old and running the Royal Bank of Canada's stock desk in New York with 25 traders working for him. Every time one of them tried to buy a large block of stock for a client, their order would only be partially filled and the price of the stock would go up. It kept happening over and over again.
The best analogy, I think, is that your family wants to go to a concert. You go into StubHub, there's 4 tickets all next to each other for $20 each. You put in an order, buy 4 tickets, $20 each. And it says, you bought 2 tickets at $20 each, and you go back and those same 2 seats that are sitting there have now gone up to $25.
What did you think the problem was?
I had no idea. I couldn't get answers.
At first, Katsuyama thought it must be that the technology at RBC was slow, until he
Can't be that the whole system's rigged, can it?
went to Stamford, Connecticut and paid a visit to one of the largest hedge funds in the world.
The same things that I was experiencing as a trader, one of the most sophisticated hedge funds in the world was also having the same problem. Then the light bulb goes off, you say, holy cow, this is a huge problem.
You were determined to get to the bottom of it.
Yeah.
Why?
Because it just didn't feel right. It didn't feel right that people who are investing on behalf of pension funds and retirement funds are getting bait and switched every single day in the market.
Katsuyama suspected that the problem had something to do with plumbing, the way the trades were routed through fiber optic cables from his trading desk.
Now at this point, this is where keep it simple, stupid kicks in. It's like the solution to this is like, really? That's it?
In lower Manhattan to the 13 public exchanges in northern New Jersey. But no one would tell him exactly what happened to his orders once he hit the buy or sell button. So he put together a team of technical experts, traders, and most importantly, an Irish telecom guy named Roland Ryan, who was an expert on high-speed fiber optic networks.
I knew nothing about trading until my first day at RBC. When I sat in a 3-hour meeting on algorithms, I called my wife afterwards and I'm like, holy crap, I have no idea what they just said.
Ryan had done work for the high-frequency traders. He knew what they were building, and he knew about the colossal amounts of money they were prepared to spend.
Yeah.
He told Brad about a company called Spread Networks that had laid a high-speed fiber optic cable from the futures market in Chicago to the exchanges in New Jersey.
They just laid a fiber optic. That's it? That's how simple it was? They just had to lay a fiber optic cable that's just faster than the person? Well, it makes sense, right? As long as you're faster than the next person, you get to see what's happening and you get to front run everything.
They spent $300 million just to shave 3 milliseconds off the fastest route, and were leasing access to high-frequency traders at $10 million a pop.
Got a shot of the
Brad
Almas running back
Katsuyama's
with
point
it.
of view, when he heard they were willing to spend that kind of money for milliseconds, it told him that the sums involved are vast. That was one of the first questions he had. He says, all right, I'm getting ripped off. Everybody's getting ripped off, but what does it add up to? And I think when he heard the story of Spread Networks, he realized this is tens of billions of dollars we're talking about.
Investing is with like on Wall Street is almost like the illusion of democracy, right? If voting was that important, they wouldn't let idiots do it, right? That's what's happening too. It's become like it's been concentrated into these big 5 operations that even if you were just a little fish underneath the big whale, all you have to do, it's made it at one time harder, but on the other hand easier. You just, the term follow the money has never been more important than it is now.
And Ryan also knew where all the cable was buried and had detailed maps of the fastest routes from the financial district in Lower Manhattan to the various stock exchanges in New Jersey, all calculated down to the millisecond.
So I would sit there, roll out maps, and draw out this data center as a box and a line going through it. And they had no idea what I was on about. And then I'd be like, hey, are you guys aware of where these data centers are located? Of course you're arriving there at different time intervals.
For Brad, the maps turned what had been an abstract idea into something he could actually see. The first place his orders were landing was the Bats Exchange across the river in Weehawken, New Jersey. And high-frequency traders were lying there in wait.
Brad realizes, oh my God, that's how I'm being front-run. I'm being front-run because my signal gets to the Bats Exchange first, and they can beat me to all the other exchanges.
It's almost like the frustration that people have when their stop losses get knocked out. Now, there's many levels of the reason why your stops get knocked out, and it's not just high-frequency front-running. It's the fact that you're leveraged, and they can't really move the market forward with all these miscellaneous 100Xs, so they just knock them out, right? But beyond that, you have to understand the concept of knowing where your stop loss is. Yeah, it's such an uneven playing field. People don't like to, admit that that's a thing, but it's a thing. It's to think that the biggest money game in the world wouldn't be rigged. That's why I think everything is rigged. That's why I think NFL football, NBA basketball, it's all rigged, and they have high frequency trading, gambling, and bots. As the rise of the poly market. These are all things that affect with the high frequency of these fiber networks, right? They know exactly what's going on before anyone really does, and then they change the game.
It only took a tiny fraction of a second for Brad's trade to reach the next exchanges on the network. But the high-speed traders were able to jump in front of him, buy the same stock, and drive the price up before his order arrived, producing a small profit of just 1 or 2 pennies. But it was happening to everyone's trades millions of times a day.
That adds up.
You make it sound like a skim.
What else would you call it?
One hedge fund manager said I was running a hedge fund that was $9 billion, and that...
Oh, shit.
Maps, data center as a box, and a line going through it. And they had no idea what I was on about. And then I'd be like, hey, are you guys aware of where these data centers are located? Of course you're arriving there.
Traders were able to
the trades the market said we should be able to make was costing us $300 million a year. That was $300 million a year in someone else's pocket.
Is this illegal?
No. That's the thing that's so shocking about all this.
Well, you use
legal
the word
for
front
you.
Running. Front running is illegal.
This form of front running is legal. It's legalized front running. It is crazy that it's legal for some people to get advanced news on prices and of other...
Some people, just not you or us.
Of what investors are doing. It's just nuts. Shouldn't happen.
Roland knew the only way to beat the high-frequency traders was to take away their milliseconds advantage that allowed them to sniff out slower trades and beat them to the exchange. He had an idea how to do it.
Then he said, you're probably better off trying to go slower, which means send the order to the exchange located the farthest away first, and send the order to the one that's located closest to you last. So stagger when you send them out with the goal of arriving at all places as close to the same time as possible.
Katsuyama and his team developed software that did just that, allowing the orders of Royal Bank of Canada's customers to reach all of the exchanges at the same time.
Now, remember, a lot of this stuff was orchestrated and developed pre-AI. Now that there's AI, you can, take this exponentially up.
Cutting the high-frequency traders out of the equation.
And essentially, our fill rates went to 100%. We couldn't believe it when we actually figured it out.
So you beat speed by slowing it down.
Yeah, as crazy as that sounds.
Katsuyama and his team went out and began selling and explaining what they had discovered to the big mutual funds, pension funds, and institutional investors, people who had suspicions that they were being front-run, but didn't know how.
And nobody had really bothered or tried to figure this out until Brad Katsuyama came along.
It was in nobody's interest to, correct. I spoke to dozens of investors, big investors, famous investors, who said that when Brad Katsuyama came into my office and laid out to me how the market was rigged, my jaw hit the floor. I mean, I knew something was wrong. I just didn't know what it was, and no one had told us.
Part of those meetings led us to believe, holy cow, this is really something, because some of the most sophisticated, largest asset managers in the world, this is the first time they were hearing this story.
Yeah, right. They're in the meeting. They're like, oh no, you don't say. High frequency quant bots? Oh my God, we're shocked. Well, I'd never thought that anyone who would do that, such a thing. Thank you very much for your information. Now get the hell out. Now, speaking of 60 Minutes, you think about the Mockingbird assets that have been around there for, I think E-Money said, like some of these people, their whole career is spent at 60 Minutes as one of these Mockingbirds, and to a point that they actually live a normal life, although when they need to be pressed in order to do something that needs to change the narrative, they just get the memo and they do it. And there's some point in their lives where they probably don't even remember that they're a part of it. They're just like, oh, we got to do something more about wearing masks. Okay, efficacy of masks. Okay. Oh, now how masks aren't good. Okay. Oh yeah, for sure, I'll do it. Yeah.
And some of the most famous names in the American stock market heard the pitch.
The Capital Group, T. Rowe Price, Fidelity, Vanguard. I mean, it one after another. He was in their offices. They said, this man walked in. Why is he going to know how the stock market operates? And at the end of an hour, they said, oh my God, he understands.
Hedge fund titan David Einhorn of Greenlight Capital is one of the believers.
Was he able to show you how your orders were being front run?
Oh yeah, they had they got the marker and the whiteboard and started drawing maps and boxes and wires and locations, and yeah, we went through it in some detail.
I don't know about you, but we've been in this community long enough to know big players. I've never heard of him, right? So you have to see how this pyramid works. You know what I mean? Like there's the big five, and then the smaller, like this guy Greenlight, who probably a substantial hedge fund, but he's not part of the club.
Did you find it interesting?
It was.
Or maybe
like
he is.
Einhorn encouraged Brad and his team to do something bigger. That's when Katsuyama, a conformist even by Canadian standards, decided to do something radical. In 2012, he quit his high-paying job.
You can tell this is a little bit of an old video by looking at the Toronto subway. Does not look like that anymore, but don't get me started.
As head trader at RBC, and went off with some of his team to start their own exchange.
You were making good money at Royal Bank of Canada.
Right. Yeah.
Millions of dollars.
Right. I guess
What's so
everyone
funny?
knows that now, right? Right. Yeah.
Why did you want to go off and walk away from that job and start a stock exchange?
Well, because millions of dollars isn't enough. I could make hundreds of millions of dollars. Yes, step at Mockingbird asset.
Yeah. Wasn't an easy conversation to have with my wife, that's for sure. It almost felt like a sense of obligation to say, we found a problem. It's affecting millions and millions and millions of people. People are blindly losing money. They didn't, they don't even know they're entitled to. It's just, it's a hole in the bottom of the bucket.
Anyway, you get the picture. So when the years of me talking about quant bots and front running and stop loss hunters and everything, just, there you go, right? On the 4-hour chart, let's see, is this forming what some might call a inverse head and shoulders pattern of sorts? It's a little bit weak. But it is. We'll draw it in just. It's a little bit weak because it doesn't really have that's weak. This isn't. This is par for the course. Now, if we were to draw this out, I would say the breakout would be at this 96.2ish. So this is where I get into my fantasy world. It's that you can see how this confluence, this 200 moving average, is careening down at this channel of ascension's resistance or support, now acting as resistance. If we were to ho-hum to Friday, maybe Saturday, Sunday, and get here and break through 96.2, there's a high likelihood that we will go above 98.3, which is again the bull market rejection zone. But this is pretty confluential 96.2, and that would be the breakout of this inverse head and shoulders pattern. If you wanted to find the probability, the price probability of an inverse head and shoulders pattern, you take the poll you slide it all to the breakout point. Come on. Which is the 200 moving average at 96.2. Put it right there. And then we're all at 105.8. Let's put her in. Now, things will be different at 105.8. But the bulls will be back. And if we can close the weekly chart, at this fantasy, which is 105. Let's see where 105.8 is. Oh, it's right here where we put this little thing, which would be the resistance of this channel of ascension, which is also the bull flag for this massive bull flag on the weekly chart, which is the mother of all bull flags. But there's a lot of things in between. That would put us way above the rejection zone at 98.3. And if we were to close there, well, things would be a lot different. We would, it's still not all-time high, but it's above this rejection zone. Now, this rejection zone thing isn't mathematical law. It's not physics. It's just what's happened. So I would be pretty surprised to get there fast. However, if you think about how low we can drop, maybe we can go up that fast. No, not in this bull run. We only drop super fast and then we stagnate and then we slowly climb up to the point where it lulls you to bed. Anyway, you can see this confluence. This is a very confluential level based on this inverse head and shoulders pattern in the old 4-hour chart. Is there a confluence here up if we go back at 105? Yeah. So it was our old peak here back in end of November. No, beginning of November 10th. It just seems like forever ago, doesn't it? Seems like forever ago that we were up here. But that was our last little peak. So if we want to be even more bullishnessly fantasic, if we were to do that and let's say stagnate at 105, now we're getting really deep into the fantasies here. Why not? We would build out this, stupid, this cup and handle pattern if we were to get up here at 105. Now, I don't want to leave this here because it's going to mess up my 24/7 4-hour chart, but maybe I'll leave it here for a while. But then if we're going down the fantasy road, that we would, come on, in this cup and handle pattern, well, you would, God damn it, Jesus. Let's make this small so we can know what we're doing here. This cup and handle pattern, you would take the bull right from the bottom of 80K up at 105. I had that wrong. 105 maybe. Oh, no, there's 105. Oh, the thing changed. 105. Get around there. Take the pole. Slide it all to the breakout point. And then we're all at 134. Jeez, I think multi-sick dum-dum someone's been saying 134 forever. Let's extend this out here. Yeah, it would still be, we'll keep this one. But you can see how that would play out. Now that's fantasy. That's Bulishnikov fantasies, right? But who knows? Because we still got to get over. We still got to get over and close the bull market rejection zone at 38.2% fib here, which is from where we are now. What is the percentage? It is 6. So we're equally as far away from it as we were from Monday to now. Right. So it's doable in a day, but it's going to be dicey. I just want to blow past that one. Come on, TradingView. What are you asking me to block here? Allow. X. That's stupid. Where is 105 here? 105. Does it have any confluence on the ding dong? 105. Right here. Not really. Not really. We're kind of in a no man's land there. But it is in this juncture, more or less. This was a good solid week of console arranging. So it is in that console arranging pattern, which would, again, make out a nice, a sweet little cup and handle pattern. But first, you can see we're paying much respect to this arbitrary channel of ascension, getting there, getting rejected. Today's rejection will be 94.5. So that's when we can expect the breakout 94.5. Will we get there? We almost got there yesterday. We got 94.12, but it's been slow. Like, it's been a slow climb. You know, I haven't seen that. This Tuesday, that was a good day. What was this candle? The candle close 5.5%. That's a good day. You can see how our expectations have diminished. 5.5%, I'll take it, right? Well, it's better than 5.5% on the down skis, right? Now, have they put in what that buy was from Vanguard yet? Maybe. 13, no. Minus 13 million. No, they haven't really put it in. Maybe they'll put in and tomorrow something. Juice the robot quant bot algos. Fear and Greed 27. Not bad. It's amazing how long we've been in fear. It's like we spent 2025 in deep fear. Have we turned green on the old monthly? Yes, we have. But on the yearly, this is the shocker, right? 2 in the green, 1 in the red. We got to get above 94.1. So this 94.5 that we said on the daily to close today, 94.5 to get out of this channel of ascension would be the 12-month, aka the yearly chart going green, and then substantiating the 3 green, the Kit Kat, and the 1 red, right? That's what we got to do. Will we do it? God, got to ask the robot quant bots on that one.
Make sure you like and subscribe.